Hi everyone, welcome to today's video. So this will be an extremely brief video about RBI's latest policy announcements and how it is going to impact the stock market. There will be a detailed video about specific stocks that I will be speaking about later tonight. So please watch that. Again, a very important video. But through this brief video, I will try to just communicate 4 very simple points that will help you understand this entire RBI policy game. So first and foremost, take a look at this chart. This is the inflation data. There are different types of inflations. For example, if you zoom in on this chart, you will see CPI inflation. You will see rural inflation. You will see urban inflation. Now, all this is not important. What is important are a couple of key points here. One is that the CPI inflation, consumer price inflation, that is the most important data. Without getting into the technicalities of it, in simple word, it means प्याज टमाटर के rate बढ़ जाना, right? So that is what CPI inflation means. There is a basket of goods and services. If the prices of that goods and services goes up, which we generally consume, it means that the CPI inflation has gone up, and it is one of the most important inflation measures. This is the first key point that you need to remember. The second key point is that there has been a tolerance level for inflation that has been decided by the RBI, and this ranges between 2 to 6%. That is the inflation rate that they keep on monitoring, and they don't want inflation to go above 6%. Just to add more knowledge to this, the midterm target that has been decided by the RBI is 4%. So as long as the inflation is around 4%, they will consider this entire situation to be really good. Right now in India, the inflation is roughly 5.5%. Now you'll say, Akshat, what is the point of this inflation? Why are you talking about inflation? And what does this have to do with the stock market? So inflation is a very important number, and here is why. This brings me to my second point. Inflation is one parameter that corporates are really worried about because they feel that inflation is going to become a big problem in 2022, and because of increasing prices of raw material and bunch of other different things, all the companies are taking a hit. For example, Dabur is taking a lot of hit simply because of the fact that the input prices have increased. Similarly, HUL took a lot of hit. Why? Because the input raw material prices increased. Asian Paints took a lot of hit. Why? Because the input prices increased. So if you pick companies across a range of different spectrums, inflation impacts everyone. Now, on top of that, you might be hearing the news that oil prices have increased and they will go super high. So again, from that particular perspective, it will increase the raw material prices in India and it will increase inflation in our economy. So this inflation is a much bigger troublesome problem than it appears. So I've tried to decode this in very simple words for you. Now you might say that, Akshat, okay, fine, this inflation is really bad. It will impact everyone negatively, all this stuff. But can companies fight out this battle in any way? So the answer is yes, companies are fighting out this battle in 2 ways. One is that you might have seen something like HUL, Nestle, all these companies increasing their prices. So they are passing on the increased prices to consumers. So these companies are going to do well in the future, no problem there. Second way is that companies are getting creative in terms of reducing their cost. There is a snippet about apparel and footwear industry. So companies are experimenting with new types of raw material. Instead of making leather for making chappals, they will institute some new kind of material that will reduce the cost. So that is how companies are fighting this inflation battle. Now comes the third and the most important point because of which you clicked on this video, which is around RBI policy. Now I gave you so much commentary for the simple fact that the simple goal or one of the most critical goals for RBI's policy is to fight inflation. Now how do they do that? They adjust something called as repo rate. So repo rate simply means the rate at which RBI is lending to banks like HDFC, ICICI, Kotak, etc. So this is the rate, this is the interest rate at which the RBI lends money to these banks. Now these banks further lend money to customers, right? So in case the interest rate is increased, then what will happen? That here HDFC Bank will increase the loan rates from let's say 8% to 10%. Why? Because they themselves are getting loans at higher rates from RBI. So that is a simple process. So the outcome is that if this interest rate or repo rate is increased, then this withdraws liquidity from the market. Now this is something that is happening in the US. So I had made a separate video. I will link it somewhere here. You can go watch that macro video. So this is the simple functioning. And if the opposite is done, that if the interest rates are decreased, then this increases liquidity in the market. There is more money that is available. So what has RBI done? So RBI has not done anything. So RBI has kept the interest rate constant. Okay, so what does this brings us to? Why have they kept the interest rate constant? So right now the dynamics are that the inflation is acting as opposite to growth. So in economies where inflation is picking up, for example, the US, the central banks there are increasing the interest rate. On the flip side, in India right now, the inflation is not a major problem. So we can focus more on growth. So that is what RBI is doing, and therefore they have not increased the interest rate because their priority right now is not to fight inflation but to accelerate growth. So therefore, they are not changing the interest rate. Now going forward, what is the likely scenario? The likely scenario is that in India, the inflation is going to rise and then Feds are going to do what with the interest rate? Let me know in the comment. That would mean that you have understood this video. So from that perspective, in summary right now, the focus of RBI or our government is to accelerate growth, not to fight inflation. Going forward, inflation is going to go up, most likely. That is the likely outcome. And at that stage, RBI is going to step in and they are going to increase the interest rate. So how does this impact the stock market? So point number one, that because the interest rates have remained unchanged and the focus is on growth, something like finance and high beta type of stocks are going to accelerate more. So banking finance stocks are likely to accelerate. That is point one. Point two, because the interest rates have remained unchanged, the activity or the industrial activity and housing development activity is likely to go up in short to mid term. Now, there are several other permutations and combinations that you can run, but these are some of the key, very important messages that you need to remember. Let me know if you found this video to be useful. Please give it a thumbs up and a comment. That would mean a lot. And I will see you tonight. Please watch the video tonight. It's going to be super important. Thank you so much and I will see you soon.